Last week, I released a video outlining one of the more popular lists in the dividend community in the Champions, Contenders, and Challengers list. If you missed that video, it'll be linked on the screen at the end of this video, so make sure you give it a watch. Today, we're going to cover the top 5 stocks over the past decade from that list to see which ones turned into the most money and some other details on each of those stocks. And at the end of the video, for a quick bonus, I also wanted to cover the top 5 worst performing stocks from the same list. But now, let me give you a quick layout of the video before we dive in. Alright, so how I'm going to break down each company discussed will be as follows. First, I'm going to show the returns without dividends being reinvested. Then I'll show the returns with the dividends being reinvested. Next, I'm going to outline that difference between reinvesting and keeping the dividend. Then I'll show the 2023 income based on the purchase 10 years ago. I will then give a quick review of the current value of the stock based on the past numbers. And finally, I'll let you know if a decade later, if the stock is still on the CCC list. Now that that part's out of the way, let's jump into the 5th best performing company over the past decade. So the 5th best performing stock from the CCC list over the past decade is the Ensign Group, stock ticker ENSG. Looking here at the first screenshot, you can see that from April 1st of 2013 to March 31st of 2023, you would have brought back $113,692.45 compared to the $29,442.88 from the S&P 500. This is a 1,037.09% total return and a 27.51% annual return versus the 194.38% and 11.4% respective returns from the market in the same time frame. Now getting into the magic behind compounding, we will look at the second screenshot. Same time frame, April 1st, 2013, March 31st, 2023. Now, ENSG brings back $117,954.52 versus the $31,599.36 from the S&P 500. This is a 1,079.58% total return and a 27.98% year-over-year return versus the 215.93% and 12.19% respective returns from the S&P 500. The difference between reinvesting dividends and not reinvesting dividends over the past 10 years would have been $4,262.07 in total gains. And with dividends reinvested, ENSG brought back $86,355.16 more than the S&P 500. Lastly, with dividends reinvested, you would have had a total of 1,234.64 total shares, and you would be making $283.97 this year in dividends. As far as the value of this stock compared to history, the 10-year median PE is 22.93, while the current PE is sitting at 25.28, and the 10-year median yield is 0.68%, while the current yield is sitting at 0.23%. Both of these metrics suggest that this stock is currently overvalued relative to its past 10 years. At the time of recording, ENSG was on both the 2013 and 2023 CCC list. The 4th best stock on the CCC list over the past decade is CTAS, stock ticker CTAS. Looking here at this first screenshot, you can see again we have April 1st to March 31st, and you would have brought back $110,609.16 compared to the $29,442.88 from the S&P. This is a 1,006.08% total return and a 27.16% annual return versus the 194.38 and 11.4% respective returns from the market in the same time frame. Now with the dividends reinvested, the numbers look like this. Same time frame, April 1st, March 31st. Now, CTAS brings back $119,531.18 versus that same $31,599.36 from the S&P. This is a 1,095.08% total return and a 28.15% year-over-year return versus the 215.93 and 12.19% respective returns from the S&P. The difference between reinvesting dividends and not reinvesting dividends over the past 10 years would have been $8,922.02 in total gains. And with dividends reinvested, CTAS brought back $87,931.82 more than the S&P 500. Lastly, with dividends reinvested, you would have had a total of 258.3 total shares, and you would be making $1,188.18 this year in dividends. As far as the value of this stock compared to history, the 10-year median PE is 25.2, while the current PE is sitting at 36.42, and the 10-year median yield is 1.05%, while the current yield is sitting at 0.98%. At the time of recording, CTAS was still on both the 2013 and 2023 CCC list. Again, both metrics currently suggest that this stock is overvalued based on its past 10 years. The third best performing stock on the CCC list over the past decade is Microsoft, stock ticker MSFT. Looking here at this first screenshot, you can see again we have April 1st to March 31st, and your $10,000 would have turned into $106,839.88 compared to the $29,442.88 from the S&P 500. This is a 968.72% total return and a 26.72% annual return versus the 194.38% and 11.4% respective returns from the market in the same time. Now looking at this one with the dividends reinvested, we have the same time frame, but now Microsoft brings back $121,505 versus the $31,599.36 from the S&P 500. This is now a 1,114.95% total return and a 28.36% year-over-year return versus the 215.93% and 12.19% respective returns from the S&P 500. The difference between reinvesting dividends and not reinvesting dividends over the past 10 years would have been $14,665.12 in total gains. And with the dividends reinvested, Microsoft brought back $89,905.64 more than the S&P 500. Lastly, with your dividends reinvested, you would have had a total of 421.42 total shares, and this would be making you $1,146.26 for 2023 in dividends. As far as the value of this stock compared to history, the 10-year median PE is 27.01, while the current PE is sitting at 31.44, and the 10-year median yield is 1.89%, while the current yield is sitting at 0.92%. At the time of recording, Microsoft was on both the 2013 and 2023 CCC list. As with the last two stocks, both metrics currently suggest that this stock is overvalued based on its past 10 years. Really quick, before we get to the top two best performing stocks on the CCC list over the past decade, help me out by clicking the thumbs up button on the video and make sure you guys are subscribed with the bell rung so you guys get notified every time I drop new content. Also, let me know in the comments down below if you own any of these stocks mentioned in today's video and how long you've held them. But now, let's see which of these stocks brought home the bacon over the past decade and which ones did whatever the opposite of that is. The second best performing stock on the CCC list over the past decade is Constellation Software, stock ticker CNSWF. Looking here at this first screenshot, again, we have April 1st to March 31st. You would have brought back $157,461.66 compared to that same $29,442.88 from the S&P. This is a 1,474.09% total return and a 31.73% annual return versus that 194.38 and 11.4% respective returns from the market in the same time frame. Now with the dividends reinvested, the numbers look like this. Same time frame, but now CNSWF brings back $168,305.60 versus that $31,599.36 from the S&P, and this is a 1,583.02% total return and a 32.61% year-over-year return versus that 215.93 and 12.19% respective returns from the S&P. The difference between reinvesting dividends and not reinvesting dividends over the past 10 years would have been $10,843.94 in total gains. And with the dividends reinvested, CNSWF brought back $136,706.24 more than the S&P 500. Lastly, with the dividends reinvested, you would have had a total of 89.62 total shares, and you would be making $358.48 this year in dividends. As far as the value of this stock compared to history, the 10-year median PE is 50.82, while the current PE is sitting at 80.65. And the 10-year median yield is 0.77%, while the current yield is sitting at 0.21%. In addition to this stock being overvalued according to these two metrics based on its past 10 years, this stock is no longer a part of the CCC list in 2023. And the best performing stock from the CCC list over the past decade is Texas Pacific Land Trust, stock ticker TPL. Looking here at this first screenshot, again, we have April 1st to March 31st. You would have brought back $246,562.96 compared to that $29,442.88 from the S&P. This is a 2,365.19% total return and a 37.77% annual return versus that 194.38% and 11.4% respective returns from the market in the same time frame. Now with the dividends reinvested, the numbers look like this. Same time frame, but now TPL brings back $258,262.56 versus that $31,599.36 from the S&P. And this is a 2,482.18% total return and a 38.41% year-over-year return, again compared to that 215.93% and 12.19% respective returns from the market. The difference between reinvesting dividends and not reinvesting dividends over the past 10 years would have been $11,699.60 in total gains. And with the dividends reinvested, TPL brought back $226,663.20 more than the S&P 500. Lastly, with the dividends reinvested, you would have had a total of 151.8 total shares, and you would be making $1,973.40 this year in dividends. As far as the value of this stock compared to history, the 10-year median PE is 33.97, while the current PE is sitting at 30.8, and the 10-year median yield is 0.23%, while the current yield is sitting at 0.69%. Now, this stock is no longer on the CCC list as of 2023, but based on the PE ratio and yield over the past 10 years, this stock could be trading at a discount when compared to itself. As promised, for sticking it out through the whole video, I wanted to present you all with the 5 worst performing stocks from the CCC list over the past decade. One crazy thing about these stocks is that all 5 of them were on the CCC list in 2013, and they're still on the CCC list in 2023, despite their poor total returns, so think of that what you will. Without further delay, let's see these money thieves.
You're never getting that money back.
It's gone. It's all gone.
Coming in at number 5 on the money thief scale, we have International Business Machines, stock ticker IBM. IBM would have turned your $10,000 into $9,626.33, which is a negative 0.38% year-over-year return over the past 10 years with dividends reinvested. Coming in at number 4 is Franklin Resources, stock ticker BEN. BEN would have turned your $10,000 investment into $7,842.77, which is a negative 2.4% year-over-year return over the past decade, again with dividends reinvested. Coming in at number 3 is Healthcare Services Group, stock ticker HCSG. HCSG would have turned your $10,000 into $7,141.27, which is a negative 3.31% year-over-year return over the past decade, again, dividends being reinvested. The runner-up for the biggest money thief is Telephone and Data Systems, stock ticker TDS. TDS would have turned your $10,000 into $6,626.83, which is a negative 4.03% year-over-year return over the past decade with the dividends being reinvested. And the biggest money thief from the CCC list over the past decade that is still on the CCC list today is Perrigo Company, stock ticker PRGO. Perrigo would have turned your $10,000 into just $3,424.29, which is a negative 10.16% year-over-year return over the past 10 years with the dividends being reinvested. Lastly, I wanted to leave you all with some fun facts that I found while completing my research.
Okay, everybody, gather around.
There were 470 stocks on the CCC list in 2013 versus the 734 stocks in 2023. There were only 33 stocks from the 2013 CCC list that had negative returns with their dividends being reinvested, which is 0.07% of that list. 234 stocks from the 2013 CCC list are still on the CCC list for 2023, which is 49.8% of that 2013 list. So there were 103 stocks from the 2013 CCC list that outperformed that 215.93% total return from the S&P 500 over the past decade, and this is with the dividends being reinvested, and this is 21.9% of that 2013 list. And 86 of those 103 stocks are still on the 2023 CCC list, which is 83.5%. Well, that's going to wrap it up for today's video. Please don't forget to leave a like on the video if you enjoyed the video or found something interesting from it. Subscribe and ring the bell to stay up with all my other uploads. And don't forget to comment down below and let me know which of these stocks you've owned and how long you held them. If the CCC list is new to you or you want to learn more about this great resource, check out this video right here. But until next time, see ya.